Hello ladies and gentlemen, this is the second tutorial video for Accounting 101 presented by NoteHelpers.com. I'm Kobe Huang and I'm going to talk about income statement today. So this is your module 4 and it will be quite important for you to understand the concept in this video as your first midterm is coming real soon. Because a couple of you are making a request in regards to cash accounting and accrual accounting. So this is going to be what I'm going to talk about this time. So now there's a huge difference between cash accounting and accrual accounting. It might be quite confusing at the beginning, but I hope you will fully understand it after this tutorial video. So essentially, cash accounting is you record the money once you receive it, whether it belongs to you or not. So theoretically, if you pick up $5 on the street today, you can record it using cash accounting. Cash accounting is only used for cash flow statement. Why? Well, because this is not accurate for income statement. Think about that. If you're looking at someone's income statement, you want to know how much they're making through normal operation. By that, I mean if you are, say, a restaurant, I want to know how much you are making by selling food, not how much money you are picking up on the street. So this is real simple stuff using common sense, right? This brings out 4 accounts that you need to be super familiar with. These are income in advance, prepayment, accrual income, and accrual expense. Right. So income in advance is when someone pay you but you haven't done the job. For example, using the restaurant example, your customer pay for the meal tomorrow but you will not serve the meal until tomorrow. So this is not your income. So as a matter of fact, it will not be your income until tomorrow, the time that you have served the meal. So even if you have received the cash, but you have not actually earned the cash yet, right? So the second thing will be a prepayment. Prepayment is when you pay someone but they haven't done the job. So really it is the opposite of income in advance. For example, you are a company and you pay for, say, someone to deliver your equipment from East Auckland to city. When you pay them, is it going to be an expense? Well, under accrual accounting, it would not be an expense. Why? Because they haven't done the job yet. So it will not become your expense until they deliver the equipment for you. Accrual income is you have done a job, but you haven't received the money. For example, you sold a bottle of soda to one customer, but that dude said he will not pay to you until tomorrow, as he doesn't have cash. So in this case, the money to be received, which is the cost of the bottle of soda, is your revenue. So even if you haven't received the actual cash, this is your revenue. And accrual expense is someone has done a job for you, but you haven't paid the money. So in this case, even if you haven't paid the money, it is still going to be an expense, right? So, let's just do some example to get familiar with this concept because it's really important for you to understand it. So say you bought a 1-year insurance costing $2,000 at the beginning of 1 year. Would you record this as an expense? Which one of those 4 accounts is this? Well, think about this. Have you paid the money? Well, you have paid the $2,000 at the beginning of the year, right? But have they performed the service? Well, no, because they wouldn't cover the insurance until this year is finished. So technically, you pay the money, but they haven't done the job. So real simple, if you go back to what we talked about, it's going to be prepayment. This will not be your expense on your income statement until at the end of the year they have covered all your insurance costs for the whole year, and then this is when the $2,000 will become your expense on your income statement. So the next thing, let's imagine you want to kill Donald Trump. You hate him so much, so you hire an assassin. You told him you will pay him $1 if he kills him. So he went ahead and killed him. And let's just say he succeed. So which one of these 4 accounts would this be? Would this $1 be? Well, think about that again. Has he done the job? Yes. He saved America. Have you paid him? No. This will be your accrual expense and will be recognized as expense on your income statement. Well, real straightforward, right? Using this approach, you can pretty much understand four of the concepts that we just talked about. So this is all I'm going to talk about for this video. If you have any other requests for the next tutorial video, just simply contact us on www.notaplus.com. Thank you and the best of luck for your test.